Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, December 7th. It is 6:33 as I'm starting the video this morning. And as always, please run your video player at 1.25 or even 1.5x for maximum efficiency. Okay, so we've got a nice risk-on morning today. Green all across the screens. I've got SPY up 1.33%. I've got NASDAQ and small caps up closer to 1.8%. I'm not even going to go through all the commodity complex, but oil has a strong bid in it. So does copper. Bitcoin's up about 5%, so it's trying to get back on track after a rough weekend. Over on the macro front, not a lot today. We do have that Biden-Putin conference call kind of thing with Ukraine tensions running a little hotter. So I don't know if there'll be any news flow coming out of that thing. I'm not even sure what time that exactly comes off, but there is that. I seem to recall that it's going to be this morning sometime, but don't quote me on that. Not a lot on the rest of the macro front. I think the next big thing coming up is 10-year bond yield tomorrow. Over on the earnings front, we had MongoDB last night that blew it out of the water. I think I saw they were up about $50, $55. So that'll be a big gap for you to either mark on your charts for a bracket trade tomorrow, or if you're into trading it today, there'll be that one. Coupa software went the other way. I saw it was down about 10%. So that'll be a bracket trade setup as well in the software space. Today, I noted on earnings, we've got Casey's. That actually is a chart that I sent out yesterday talking about the golden age of food retailing. If you go back in time and look at like the 70s, when there was a constant bid in inflation, especially, not especially, but food was definitely affected there. It was a different era in food retailing. There were a lot more mom and pop and fewer big conglomerate chains like there are today. But in that environment where you've got rising food prices, of course, as a food retailer, you're less pressured on margin because everybody's raising prices, and also you're getting your margin on a cost of goods that is rising. So that tends to feed on itself, where if prices are 10% more than they were last year, then you're gonna beat your profit projections, or you're gonna beat last year's comps, is what I'm trying to say. So if you look at the food retailing stocks, the Albertsons, Kroger's, the SFM, Sprouts, Farmers Market, all have nice looking stocks along with Casey's. So that may be a place for you to, look for a stable name. You're not going to get rich on Kroger, but it's nice to have a low beta stock in the mix of longs when things are a little unstable, a little bit crazy. It's nice to have a lower beta name every once in a while. Also, we got PagerDuty tonight, Toll Brothers in the home building complex, and Stitch Fix. So that's what I saw as far as tonight goes. Let's get into the charts here. I spent a little bit of time this morning on the blog just on a quick technical analysis refresher as the charts do repair work on themselves, kind of things to look for, because you're probably trading a lot of different names than I or anybody else. there's certain things to look for in any chart after coming off a pullback. What are the milestones that you can look for in your charts for objective keys to things getting rebuilt. So I'll kind of point that out as we go along. I think the most important thing this morning to worry about is that gap, the opening gap that we'll have. So here we are in SPY. Yesterday, we got a nice bounce from oversold conditions. We recovered the 50-day moving average here in green. This key support at 450 held. And so now we're just under the 8-day and then 20-day. And if today's gap holds, the open holds, more of a gap and go situation, we should be back above the 8 and 20-day, which would put SPY back on much firmer ground. And here I've got the levels on the 2-hour chart. I think an important level is this 463.5, 464 area. Why? You've got, this was a level back in the chart that was shown to be support. So now it's resistance. And also getting above that level would take out these breakdown candle highs right in here. And whenever you're in a repair mode, recapturing a level where a big sell bar, a breakdown candle, if you will, happened, that's always a positive sign. Recapturing that breakdown candle high, and you can see here recapturing a key level on the chart. What was once support is now resistance. You get back above 464, 463.5, then you've got a nice place on the chart. If you had gotten long yesterday, or at any point, you would be in a good place to raise your stops this morning. Should we get above this level here, 463.5? Here's just the granular look on the 30-minute chart. You can see that we broke above downtrend resistance yesterday. We came back to the trend line, little back touch, but now this morning with the big gap up, we're going to be pushing towards 464. And of course, as soon as that first candle completes, you can mark in your opening gap. You can set an alarm at the top of the gap. And then what you can say or should be saying to yourself is, I want to stay long against the opening gap. And if we fall back in the gap, then you certainly, if you're trading on a fairly active time frame, you're not going to want to see, a 1% gap backfill all the way to yesterday's close. I mean, you want to be short in that situation. And I want to show you that we had a very similar setup last week that I want to remind you of. Here, I don't know what day that was. I guess December 1st. We had gotten oversold. We had a big gap up. And that's the purple box that I've got drawn in here. Actually, I never took it off. So this was the opening gap all the way up here. Then we made a rip move right into this 464 and downtrend resistance. And then they rolled it over. And actually, I've got marked here the places where you should have been thinking about selling. One was that resistance. The second one was a re-entry back into the morning gap. And then the third sell location was when we broke the prior day's open from green to red. So those were three distinct sell locations. And so today as price moves into this 464, have in your memory bank, hey, that's where it failed before. Not saying it's going to fail today, but your antenna should be up at that level for a potential repeat of this move. And certainly if price were to come up and then come back to the gap and not hold, you've got to exit your longs, because then you'd be re-entering the gap and moving to the downside. Here on the Qs, same idea as SPY. We held key support at this 380, 382 level. We got a bounce. We recovered the 50 EMA, which is always positive. We recaptured this uptrend support line, which is positive. And now we're sitting on an almost 2% bounce. Keep the 8-day and the 20-day in focus here at around 391. I think that's the next big level of resistance. And you can see that 391 right here was the breakdown candle high. Now there's a little resistance here back in the chart at 390. I don't know where Qs might open, but you got resistance at 390. You've got the breakdown candle high along with downtrend resistance right there at 391, 392. And then a big level above, you can see, is 394. Why is it the most important? Because it's the largest volume over price bar on this time frame. So that's just a signal to show you that there'll be a fair amount of overhead resistance right there at 394. And then here's your granular view. 388. Actually, this could probably be moved up to just 391 at this breakdown candle high. And then you've got 394. IWM, big reversal. Yesterday on the, well, first it was an oversold bounce, but I think the Omicron news flow is positive in the sense that it's not getting worse. We haven't had any big scary headline that, oh my God, transmissibility or lethality or anything like that. We didn't get any of those yesterday. We didn't get any overnight. So all your cyclicals, airlines, hotels, car rentals, cruise ships, travel booking sites, all that stuff, even banking, regional banking was up. We had a bump in yields yesterday of about, 10 basis points, something like that. So IWM had a good day, and we already talked about this morning in futures. They're up about 1.8%. So on the daily chart, we're back above the 200. We closed above that yesterday. But look at the, the 50 is way up here at 228. In fact, the 8 and the 20 have already broken below the 50. So that's, in and of itself, when you've got fast moving averages below the longer ones, like we have here, we've got the 8 below the 20 and the 20 below the 50. That's a bear look. Whenever you've got the fast ones below the slower EMAs, that's a bear look. So we're going to have resistance at the 8-day. We're going to have resistance at 222. And then we're going to have both gap and 20 EMA resistance at 226. So there's a lot of work to do in IWM. And here you've got just the the granular levels. You can see here in gold, we've got the 50 EMA covered or pulled across from the daily chart. So there'll be resistance right here on the 50, and then we've got that big gap to fill. So just from a practical standpoint, well, let's look at yesterday real quick. I want to show you on the daily chart. We had a gap up open, but then we had a very nice reach down candle that almost got to the Friday lows at 213. And if you had recognized that, that would have been a awesome place to get long. Then you had, once it reached back and reversed, kind of never looked back. We broke above 217. That would have been a buy point for you. Another buy point would have been a little above 218, like 218.20, if I recall from the 5-minute chart. Why? Because you had a big volume over price bar. You had downtrend resistance, broke above that. You got an instant $2 pop, faded a little bit into the close, but whatever. So now this morning, we're going to have a nice gap up. If you had held your position, what you can do is if you get a push into this gap or towards the gap where you see it stall, you can take profits on this earlier position. And so when you get to the gap, you'll be in more of a neutral posture. And then if you get a break into the gap, you can get long again, because with a big gap up and then hitting this gap for the first time, you're likely to get a reaction back. So that might be a good place for you to take profits if you held a position overnight heading into this morning's big open. Nice day for Facebook. Right on up here, I've got your pivot at essentially 318. I think you can stay long against 318 and look for 324 as your first level of resistance, and then right on up the line here. You can see that down in this area, not a lot of volume over price resistance. It really starts coming into play at this 324. But hey, that's $6 from here. So I think you'll get a gap open, but I think you'll start seeing some resistance at 324, then 328. Apple, nice gap up yesterday. Probably have another gap up today. Follow the same procedure. As soon as you get your gap marked, put it in, set yourself an alarm, and then stay long against the gap this morning. The place you'll want to mark on your chart is the all-time high from just the other day, up here around 169.50. Whether you're a guy that marks, the tails or marks the bodies, it really doesn't make any difference. Whatever you use, stay consistent with that, and then look for or be wary of a double top where it would come up to the prior high, run into trouble, and then roll over. Not saying that's going to happen, just putting it on your radar. Once you get up to this high, you want to break out from there, and then that's a place to roll up your strikes and then stay long against the all-time high. And even for you traders that aren't in it, you can mark that all-time high as a buy point for you for a new position. All-time highs you got to buy. No natural sellers up here. So price comes up, breaks out, proves it. you can get long with a stop just below, and then you've got your objective long trading location. Really interesting price action yesterday in Tesla. Really nice technical action, if you will. We talked about this 1010 being a pivot yesterday, and that first bar of the day came right down to 980, broke it like it wasn't there, and had a really nice reach down candle to touch the top of the gap. And for you chart watchers out there, that's that very common move, to reach down to a gap on first touch and have that hold, have that bounce. And that's exactly what you got. So if you were a nimble, super nimble Tesla guy yesterday, and you saw that 1010 break right out of the gate, and you got short, you got a fast ride down to 950. And, coming into that gap is a normal place where you'd anticipate the top of the gap holding. And you could have either reversed there or just been happy with your win. But just looking at it technically, on the way back up, once you recovered 980, that's your objective buy signal, right? Recapturing a key level from below is your trigger for a long, and then you got another $30 of upside there. So if you were on top of Tesla yesterday, a couple good chances to pull some money out of that one. As far as today goes, really no technical changes. From the standpoint, 1010 remains the pivot point. You're probably going to see a gap up this morning. I think 1050 is first resistance, and then you've got a big line of resistance at 1080 with all these reactions along that line. Microsoft, big bounce. We got the 50 EMA down here around 320. Big bounce back to 326. The level to recapture, in my mind, for a more or less all clear, or definitely on a technical buy basis, is 330. So a big visit to the 50, a bounce and recovery of 330 would be like, a technical check mark. We tagged the 50, we bounced, we recaptured key support at 330. If you had bought the 50 and you're back up here at 330 and it gets recaptured, I would certainly be rolling up my strikes and stops to that point. And don't forget, I'm not willing to say at this point, all clear, back to all-time highs. We're one COVID headline. We've got the FOMC meeting next week. Nobody knows what Powell's going to do as far as his taper goes. So I think we've still got, a week to 10 days of volatility in front of us. So remember that scenario we talked about yesterday, and that is a breakdown, a back test, and then a fail. Just like a breakout in reverse. So here we've got a big breakdown, a move to the 50 where you'd expect a bounce. You get a big bounce. Market's all green today. We come into 330. If you get the sense, if you see 3 bars, with the market ripping or the market doing whatever it's doing, you see a bunch of bars where it cannot get through 330, that's a warning sign, right? If the market has a big bullish impulse, yet the stock that you're following cannot break through the prior support level because of all this resistance, then that's a technical cue that maybe all this is a breakdown back test and waiting for it to roll over. So be aware of that this morning. Amazon also had a nice reach back candle to the Friday lows at 340. Gave you a nice chance if you were on top of it and you're an active Amazon trader where you were really focused on it. You got a nice reach back into 33.40, and if you had taken that long, then you got a nice lift of $100 up here to 34.60. You got a little pullback into the close, but that was a nice trade for you. And look, even if you don't get this perfect entry, you still had a logical buy point here at 33.80, which we had on the chart when price came up to recapture that level. That was a buy, and you still had a very, very nice trade on that the rest of the day. So today looks like 34.30 to me is your pivot. You've got a big line of resistance here with this box at 3,500. That's going to be a key resistance level. And then you've got a level here at 35.30. It's going to be a level of resistance as well. So, but as far as this goes this morning, looks good. Mark your gap as soon as price opens, and then you can stay long against it. Very much the same price action yesterday in Google as the other ones. You got a nice reach back into 28.10, which was a location where Friday they could not break that level. And so when you see that, in your active trading, doesn't matter if it's Google or anything else, when you see a bar come in to a level where it is held for, literally 7 or 8 bars, 7 or 8 hours, that's solid support. So if you get a reach back candle in there, at the very least, that is a highly objective location where you can get long and put your stop just below and then see what happens. And in this case, you got a nice lift from the 28.10 area all the way up towards 28.80. Fell a little bit shy, 28.75. So, that's $65, and you actually got that in a heartbeat. You had that level at like 1 o'clock in the afternoon. So that would have been a great trade. So on Google today, I think he uses 28.60 as your pivot, and with first resistance here at 28.95 and then 29.20, you can see that's going to be your kind of like your big level right here because of all these. There was a resistance. So you've had 5 or 6 touches of 29.20 where price has been rejected. So that'll be a big level for you Google traders. Netflix bounced like with everything else. I think you can just, if you got long yesterday, you can stay long against 600, and you'll probably get a gap open this morning. I think your first level of resistance is going to be 620, but look, you've got a lot of moving average resistance overhead. So Netflix is going to have a lot of work to do in the coming days to recapture those levels. And I think just looking at the chart, 640 is going to be an important level for Netflix. Why? Because that was a prior breakout level, It was a support level. Now it's a resistance level. And you will have recaptured the 50 EMA that is just below. And actually by that time, you'll probably have the 20 EMA coming right down into that area as well. So 640 is shaping up to be a very important place on the chart. Semiconductors, again, really, really nice technical action if it was something that you were focusing on. We got first candle of the day. Let's see where the prior close was. 301. Yeah. So we were up here. This was the prior close on Friday. First candle of the day was a big red bar that came down and filled this gap, right? Went right through, did not bounce that you typically see on a first touch. Came down, went right through it. The next bar was probed even lower and then recovered in a hammer type fashion. Your buy points yesterday, your first buy point was a break below key support at 292, but then coming back up through it. That's your first buy. Your second buy was top of the gap, a reclaim of that level, and then you were well on your way at that point after this hammer type reversal. Came back up through and recovered 299. I think today with the gap open situation, I think 302 is going to be your pivot, and then you can stay long against that level or the top of the gap, wherever that may be, and look for 305 and then 307 back up here where this big breakdown candle happened right here at 307. Always look for that on the chart after a sharp downtrend. Look for those breakdown candle locations, and those will be important technical events as charts repair themselves. Okay, so let's kind of recap today. Not very much on the macro front, not a whole lot on the earnings front. I think right now we're in a combination of oversold bounce with risk sentiment coming back to life, with an absence of negative COVID news, and kind of in limbo. The Fed's in its blackout phase, so you're not going to have a lot of Fed speak, or no Fed speak heading into the FOMC meeting next week. Resist the impulse of complacency, like this thing, okay, we tagged the 50, now we can go on to new highs, especially after a big bounce yesterday, a big green open this morning. I think we're still in kind of a vulnerable type environment. Remember, as long as we're between the 50 and the 8 and the 20, we're still in that tactically defensive mode. If we can recapture the 8 and 20-day moving averages, that'll go a long way towards getting us kind of back on track going forward. So let's see how it goes. Have a good day of trading. Remember, watch that opening gap. Mark your gap. Set your gap alarm right off the bat. And then see if we got a gap and go or a gap and backfill situation. Keep your head on a swivel. Stay positive. If you mess up, don't beat yourself up. Look for the next opportunity. This has been Chris Buss with Traders Profit Compass. Talk to you next time.